And Melissa, when you look at what's going on with Tesla, it's pretty simple. This is a company that is in the process of eliminating 7% of its workforce. That comes out to about 3,100 jobs, and the reason is they need to lower the cost of the Model 3. In an email to employees, Elon Musk said, while we have made great progress, our products are still too expensive for most people. How expensive is the Model 3? Well, they talked about someday selling it for $35,000. The reality is that most Model 3s on average are selling for between $50,000 and $55,000. Now, Elon Musk would like to raise the volume and bring that average transaction price down somewhere in that $40,000 range, maybe $35,000 to $40,000. But in order to do that, they've got to be a lot more efficient and they've got to lower their costs, which is why when you take a look at shares of Tesla, keep in mind that he also said today that they will be likely posting a profit, a tiny profit, in the fourth quarter. It'll be lower than in the third quarter, but it is, in his opinion, going to be a profit. However, going forward, guys, we're now in that area of lumpy deliveries. Not entirely sure about how much demand is there, especially as they try to lower the price point at which they're going to sell the Model 3.
Phil, last year, I believe it was in June or over the summer, they also fired some staff and then they hired back a lot of people. And so when you take a look at the staffing levels over the past, let's say, 9 months or so, is it actually almost the same? So this 7% reduction in the workforce actually looks to be the same number of workers.
Well, he said today that they increased their hiring by 30% in the last year.
Yeah.
So it doesn't look like they're getting rid of everybody that they brought on. But, Melissa, people are misconstruing the fact that they added all of these people, that they ramped up their production of the Model 3, and they met their goals with the idea that they can continue at that level of staffing. You just can't have that many people building these vehicles. It's not cost efficient over the long term, and that's why they need to become much, much more efficient and lower their costs.
Max, do you think Elon Musk made a New Year's resolution or something to get the workforce right at all of his companies?
You know, you do wonder, and one of the interesting things about Elon Musk and this kind of interlocking group of companies is that there aren't bright lines between them. I mean, Musk is famously going back and forth between SpaceX and Tesla. Aspects of the Tesla operation are located very close to SpaceX. There's shared staff. I mean, they are two different companies, but at times the lines really blur. And it does feel like, maybe while Musk was looking at Tesla's operations and really looking at, we need to, get this company as close to profitable or as profitable as possible, he might have said, hey, maybe it's time to sort of, trim some at SpaceX. So I don't think you're wrong in that assumption.
So why are we seeing these layoffs at SpaceX? The COO, Gwen Shotwell, said there'd be fewer launches this year. Why?
So the thing that's happening with SpaceX is it's kind of transitioning from its Falcon 9 rockets, which are the ones that everyone knows, to this new rocket, the BFR, or I think they just changed the name, but basically it's a much bigger rocket that's designed to carry much heavier loads, and so some of the development is changing. The other thing is these Falcon 9s are reusable. I mean, the whole point of SpaceX was that they were going to be able to use these rockets, and that was going to bring the costs down. Now, they potentially don't need to manufacture as many rockets because they'll be able to use them. Then that's good for Elon Musk's overall vision of making space much more accessible to humanity, but maybe not so good if you're an engineer or a worker at one of the factories.
And meantime, the Boring Company, the scale of hiring is much smaller, hiring about 80 people or so. But how significant is that, given the nascent stages of the project and the potential payoff?
I mean, this looked very much like a hobby, a few years ago when we first started hearing about it. And, I remember when Elon Musk himself, told me about it, it sounded, not entirely thought through. But as they go on and it's looking more and more like a real business. I think it's something like 80 employees, and they have job openings, as our colleague Sarah McBride reported. So So I don't know. I mean, it seems very early. This sort of demonstration track that they showed off in Los Angeles looked, while kind of cool, nothing like a sort of finished product. On the other hand, this is kind of what Elon Musk has been famous for, is taking these crazy ideas and turning them into businesses.
So is the stock too risky to own? And I don't even know why I'm asking this question to you, Tim, because I think I know the answer. Because you're going to say no.
So let me surprise
yes,
you.
You cannot own it.
Yeah, well, I'm going to point out that first, if this was Ford or GM doing this, we'd actually be impressed. We'd be rewarding the company, and we kind of did that with GM. But of course, they're not. And this is the whole point with Tesla. The risks around Tesla are not around their battery. They're not around the technology. They're not around, even at this point, even the CEO. They are about ramping up. And to me, that's the big risk, because Tesla, operational efficiency and execution to really grow this thing into a mass market, this is a mass market car, has been held in question. And it does make you question whether what they did last quarter is sustainable. And also, that that tax cut, I think, is a lot more important to Tesla than people thought, and losing that's a big deal. The subsidy, excuse me, sorry.
I think that the problem, whatever the reality is in terms of the cash burn, we'll find that out when Tesla reports earnings, is that when you hear about staff reductions in order to make something more efficient or more profitable, whatever, you immediately think about what their position is. And you think about them building a factory in Shanghai, and you think about them continuing to ramp up production and meeting targets and wanting to remain GAAP profitable, and you think maybe they got to do a capital raise. I mean, that's back. Not that it's gone away, but it's definitely back in the forefront.
A couple months ago, we said they sort of took the capital raise out of the equation when they talked about how they're going to be cash flow positive, right? I thought, listen, I do think there's a chance for a capital raise as well. And the fact that the stock has rallied off them historically, I don't think it does this time. Stock has been in this 275-ish to 375 range. It's vacillated there a number of times over the last couple of years, and it feels as though you're going to revisit that 275 level and then give it another shot there on the long side.
I mean, that's just it. It's just it's a gambling chip. Actually, the exact high is like 385. The bottom is 250. It's done that 6 times. So when you drop from 385 to 250, you drop 35%. You got to climb 50% back to make it high, and it's done that 6 times. Nobody's winning in this, bearable, and it has nothing to do with whether he's tweeting or smoking or whether he's cutting or not cutting or he has a tent or he doesn't have a tent.
What the stock does.
It's just what the stock does. It's one of the highest beta, untradeable.
Done nothing in 5 years.
I think you guys have to remember that they're going to lose on a GAAP basis $1 billion this year. Okay, so I mean, it's not like things are getting that much better. They sold 7,000 more cars quarter over quarter in Q4. So to me, this thing is challenged. This is one recession away from being in a very tough spot. And don't forget, SpaceX also cut employees last week too.
So, Pierre, of course, it's sad news when anybody loses their job. But in terms of the health of the Tesla business, is this encouraging or discouraging?
That's a difficult question, Emily. If you look at Tesla today, they are at a turning point. They've been selling 60,000 Model 3 in the US every quarter at a price above $55,000. If you look at what it represents in terms of market share, it is 60% of the US market for the sedan premium segment above $55,000. So we know this level of deliveries in the US at that price point is not sustainable. So, and on top of that, we know it has been supported by very strong subsidies. So as we get into 2019, Tesla gets a subsidy cut and has to lower its prices, has to start shipping cars abroad, and then has to start introducing in its mix lower price SKUs and ultimately the $35,000 Model 3. What do they need to do to achieve that? They need to adjust their cost base. And that's, I think, the meaning of this cost cut today. If you think about the numbers, this is going to help Tesla reduce its operating cost by a bit less than 100 million, which is what Tesla is giving in price cuts to US consumers with a $2,000 price cut they've announced earlier this month.
Right. So I have a chart in the Bloomberg here which shows Tesla's free cash flow turning positive in the last quarter. Elon Musk is saying they need to make these job cuts in order to get the cost of the car down to that $35,000 to reach a more mass market. But will they have enough people to meet production numbers and reach that mass market with these layoffs?
Excellent question. The best way to answer it, looking back at last spring, when Elon Musk announced in a very similar fashion that he was laying off 10% of the workforce of Tesla. That was at the end of spring. And 3 months after that, Tesla had succeeded the ramp of the Model 3, had produced over 50,000 units in the third quarter, broke even in terms of profitability, and generated a very strong, the very strong free cash flow you just showed on this chart. So I think we are today in a similar situation. Tesla, since the summer, has grown a lot its staff, is now taking a step back, is implementing new efficiencies, taking people out, and then from that basis is going to be able to continue to grow delivery. So what I would expect, guided by Elon Musk's comment in his publication this morning, is Tesla to start the year just profitably and to be able to improve profitability during the year as it keeps growing production and growing deliveries of the Model 3.
Now, I have another chart here showing that because of the stock plunge today, because of these layoffs, Tesla's lost the market cap crown for automakers. Tesla is the white line there, GM blue, Ford yellow. You can see GM now slightly surpassing Tesla. Of course, we know, Pierre, Tesla is a market leader in EVs. Tesla has first mover advantage. There are a number of different competitors that have electric cars coming to market this year. Sales will be slow initially, but could really take off next year. Is there an opening right now for the competition?
There is definitely an opening for the competition because Tesla is showing that this market is very strong. Can you imagine capturing 60% of its addressable market in the US in the first 2 quarters for the Model 3? Now, can they capture it? That's where I have more doubts. As you very justly said, Tesla has a first mover advantage. Tesla has been designing, manufacturing, refining, improving electric cars now for more than a decade. And when I look at cars that are being announced by competitors coming into the market this year and next, what I see is 2 things. From a technological standpoint, these cars are about 10 years behind what Tesla can do today. And then from a competitiveness standpoint, these cars are still very expensive in the higher end of the market, and none of what you can see announced by competitors today can really compete with the Model 3.
Elon Musk has broken ground on that factory in Shanghai. That will give Tesla some advantage over competing automakers, at least U.S. automakers, who make their cars outside of China. So this will enable Tesla to avoid tariffs on its cars inside the country. But at the same time, the Chinese economy is slowing down. We don't know what the health of the Chinese consumer will be. How optimistic are you about this factory in China giving Tesla a significant advantage?
So the good thing about this factory is that it's not built yet. So it's still to be built, it's still to be ramped. It takes a long time. The plan today of the company, as I understand it, is to be able to start assembling cars in Shanghai at the end of this year. By then, Emily will of course have like a much better perspective on what the global economy, how the global economy is evolving, how consumer demand is evolving in China, and of course, at that point in time, Tesla is going to be able to adjust its investment plans there in order to serve as justly as possible, as precisely as possible, the demand they can meet.
Now, Tesla's always been a very divisive stock. You've got big camp of passionate true believers and a big camp of passionate skeptics. Which of those do you think this year will be proven right?
Well, I hope the optimists are going to be proved right, as you can imagine. The reason for that, very simply, is that the year looks like a very strong ramp. We are going to fall off that cliff in the US of very strong pent-up demand going away, of subsidies being cut by 50% first now and then down to 0 in the summer. And as that happens, Tesla will ramp its production outside of the US. In Europe, where sedans are very popular, it's a very large market for sedan cars. Tesla is going to be able to introduce leasing to foster, to encourage demand. And most importantly, Tesla is going to introduce lower price points. And I would insist on the last one. Emily, the market, between the market for cars selling for $55,000 and more, and the market for cars selling for $35,000 and more, there is a 5x difference. In the world, we ship about $3,055,000 cars and $15,035,000 cars. So as Tesla is able to take its prices down, it should meet increasing demand everywhere in the world. And that's the reason why I am optimistic and positive for Tesla this year.